Well, hello and welcome to PM Express. I'm sure it's your favorite hour on the day. Thank you very much for tuning in. And today we're going to look into Ghana's banking culture. Why do I say that? For those of you who have traveled before. Now, this is how I know banks work. I mean, they literally chase you to come to them so they can help you. And so if you go to, let's say, a furniture shop and you buy a sofa, by the next day your bank writes to you to say, listen, we'll give you 2,000 cedis or 3,000 cedis to buy more furniture at a cheap rate, so come to them. If you go to a car showroom and try to purchase a car, as soon as you leave your deposit, your bank will write to you to say, no, don't pay the rest. Come to us, we'll buy the car for you so you can pay for us. Holiday, if you're getting married, so constantly your bank is writing to you to say, look, come to us and we'll give you money at a cheaper rate or at a flexible rate. Come and get a credit card. And they would even tell you that if you owe anybody anywhere, we'll go and pay all the debts for you and then you just pay us. So assuming you owe Bank A, Bank B, Bank C, they say no problem. Come to us, we'll pay all that debt for you, you consolidate it, come to us and we'll pay for you. So constantly, the bank is chasing people and offering services. And indeed, they make you feel as if, look, you're God. But then you come here and then the roles are reversed. Here we are, for the population, those in the banking or economic fraternity are saying that for a population of 30 million, we have far too many banks. But guess what? Ironically, we have far too few people who are within the main banking stream. Too many people unbanked. How does that work? Yet, those few people who are unbanked are not even inundated with good customer service. They are also complaining about loans, and big businesses, well-grounded businesses will talk to their bank managers like they're talking to the Pope only to get business, some money to expand their business. And that's become the culture. And then the funny thing is, there's two streams. There are banks that are solely owned by Ghanaians who are, literally falling off by the year, and those that are owned by foreigners that are thriving. Hello? In the same business. What is it that the foreign banks are doing that makes them survive? And what is it that the local banks are not doing that makes them fall off the banking ladder? That's the discussion today. Yes, I know 5 banks have been consolidated and that's what has generated this conversation, but I don't want to be pointing fingers or being the first one to throw the stone. I just want us to look into, do we have a banking culture and what is it? My name is Nana Ansakwa IV, Chief of the Little Republic within the Republic, Akomo Dumasan. When I come back, I'm talking to people who understand banking. Don't go. Well, thank you very much for staying, and we are looking into Ghana's banking culture. If it is that we have one, what is it? And with me in the studio, sat right next to me, we're going to find him, Amban Temsa, because he's not been on the show before, is Stephen Amwa, CEO of Maslok. You're welcome.
Thank you, sir.
Because I'm a chief. The first time we come to the palace, Joe Amban Temsa, my viewers and I. And then, no stranger to the show, he's paid his Amban Temsa long time ago, but me anyway, is Mr. Joe Daxing, Director of Operations, Delex Finance, definitely understands what we are going to talk about. Thank you very much, Joe.
Good to see you.
Good to see you. Good to see you too. But I think I'll start with you, Joe. Do we have a banking culture, and what is it? And like with my intro, I know how bankers work in other fraternities. They beg you, they chase you. Even if you have the cash, they tell you, look, save your cash and use our money. And so you know what their culture is, that they are constantly trying to give you money. Look, come and get this credit card. If you owe anybody, look, we'll go and pay for it. Just consolidate it. What's our banking culture?
The heart of the problem you're talking about is actually fairly simple, which is that as a banking institution or financial institution, rule number one, when I lend, I should get the money back. Or I should have a good expectation that I'll get the money back. When you come into this environment where there's a poor addressing system, there's no way to identify somebody uniquely. And so essentially, I can give you money, and if you disappear, there's nothing much I can do about it. And to make it worse, a culture where not paying your debt is also acceptable, then Nana, forgive me, nobody's going to chase you to give you money. They won't chase you because if you don't pay, there's nothing they can do. They won't chase you because there's a certain sense that your culture is that it's okay not to pay. Whereas in another environment, it is
abomination.
It's an abomination. In any case, you can't get away with it. They would find you out. They would trace you.
And nobody else will give you credit.
And nobody else will give you credit. This is a country where even if I can walk to Bank A, collect money, not pay, walk to Bank B, and collect money. This is a country where...
And Bank B wouldn't know that you owe Bank A?
Bank B, you can tell me about credit bureaus, but they don't work here. They don't work as well as they should. This is a country where you will take this property as collateral and take it to 6 different places under 6 different names. And there are people who are third-party collateral contractors. You see, what you have is not the unwillingness to lend. It's an environment where it is very difficult to collect. And so long as it is difficult to collect, you will find financial institutions reluctant to lend.
Let me take preliminary comments from Stephen Abua.
It is a very big issue. It looks like the way things are happening when it comes to the banking industry or the financial institution, we should try to actually analyze it, like analyzing the way blood is behaving in the body. So far as our economy is concerned, so far as our country survival is concerned, because the financial institution or the banking industry, for that matter, is like the central nervous system in our body. All over the world, when they get into this situation, it affects the country's economy if it's not well and properly managed. Whether it is caused by the bankers themselves, whether it is caused by the systematic risk factors, whether it is caused by the government or any factor. I mean, these are there to be discussed. But the fact of the matter is that where we find ourselves in is something we need to manage it well. I hope and pray that the bold decision taken by the Central Bank of Ghana will not end there, but going forward, proper measures will be taken. Just as my boss has been stating a few of the prevailing factors and challenges that are probably attributing to these things. There are a lot. You said something in your preamble that how come foreign banks are working and then the banks here, we're having issues. Here, we wouldn't say all of them, but some of them are having issues. I think all over the world, there are 2 major factors. The systematic risk factors, that is general. Whether you're bank A, B, C, D, company A, B, C, D, it can affect you. The bigger macroeconomic picture of every system, it can affect all. That one, you cannot diversify. Whether your bank managers are good or bad, it's a general problem. Then we have the company-specific risk factors. These are the unsystematic risk factors. That is where we have problems. And trust me, the problem is not only with the banking sector that are owned by Ghanaians, except that because this situation has the public interest that we are all talking about. I had the opportunity to do, and because of now my appointment is difficult, but for about 10 years I was doing investment consultancy for a few companies in Ghana. And trust me, most Ghanaian-owned companies, I wouldn't say all, have been mismanaged. A lot of them. Ask yourself, how many Ghanaian-owned companies for the past 50 years are still existing? We should ask ourselves, how many of them?
First generation.
Why? McDonald's and Go, how did they start? Of course, they have a very good system. Even their governance to me is better than us. Their economic system is better than us. It could also contribute to that. However, I think the way industries are being managed by the players or actors in our country, it is time we looked critically into it and probably try to avoid politics if we want to go for it, because we always look at the bigger picture. Oh, the interest rate, oh, the government aid this, oh, government be this. But trust me, a lot of companies in Ghana are being mismanaged. Ask yourself, how many savings and loans, how many microfinancial institutions have blossomed into banking and they have survived? What actually got them into these areas? A lot. Even government upon government. You realize that we don't really put appropriate measures in place before starting projects. You check. It's the same way Ghanaians manage, I wouldn't say, oh, manage their companies. I tell you some of the companies being managed by Ghanaians, the way they go about it, you cry. Will you believe that some of them simple bookkeeping they don't have? It's only when they want loans and grants, they get some accountant to put figures nicely and you trust them. And then they get maybe auditor to stamp and they will use it for the loan from the banks. Will you believe that? Will you believe that most of the companies owned by Ghanaians don't even have annual budget set? They don't have any control system for their budget. Do you believe that most of them don't even have well-defined responsibility framework? Do you believe that some people are even employed, not based on competence, even in private sector? I call some of this Cinderella syndrome. It's one of the things killing us. Are the goalkeepers keeping the post? Are strikers striking? There are a lot of serious fundamental issues prevailing in our industries in Ghana, but we're overlooking them. And I'm sure, when it comes to these banks, there are issues, maybe technical things to discuss. But generally, because it says preamble introduction, Ghanaian culture in doing business, I'm not saying everybody, is a major difficulty. Trust me, it's a major difficulty. Something that we should go back and redefine our corporate focus as a people and start working on them critically. Otherwise, government upon government will bring all the capital, reduce all the taxes, give the best interest rate and everything. Still, if you like, pick 10 Ghanaian-owned firms. I'm not saying all of them, please. Some are doing well. Give them money. Even give them interest-free. Cut taxes to even know and give them 10, 15 years. And you come and tell me what
They'll
I'm
be
saying.
struggling.
We have issues as a country. Per the way we manage our industries, our culture and other things, we need to change. Otherwise,
joining us on the phone is Dr. Priscilla Chumesi Bafo. Dr. Bafo, you're welcome.
Thank you.
Sound, if you can give us a bit of sound, you can hear it, Doctor. Doctor, can you hear us?
Yes, please, I can hear you.
Okay, Doc, hold on 1 second. I'll come to you. Mr. Jackson, local banks, foreign banks in the same environment. You would think that the local ones, would have an advantage because they are with their own people. So what's happening?
One simple answer. They're owner managed.
Exactly.
Our local financial institutions are owner managed. And the governance of these institutions is riddled with all manner of conflicts. Lending to themselves, lending to cronies, not paying proper attention to credit lending procedures. And the list is on and on and on. That you find that there's one simple reason. If these institutions, the so-called foreign-owned institutions, the Barclays, the Standard, etc., if the MD gave money to himself or a related company, he will be out so fast you wouldn't be able to mention his name before he's thrown out of the office. And yet our local institutions do it time after time after time. So it's not surprising. Whereas when a foreign institution is coming into Ghana, we insist on making sure that they truly have brought capital to operate. When a local champion says, I want to set up a financial institution, we allow him to operate, him or her to operate with smoke and mirrors. And the capital that they bring is what we call, what we jokingly call a sale and lease back. The money is only put on the table to show the bank, and it has to be returned or pledged or whatever. At least it has to go where it came from. So what do we find? When the central bank says they fraudulently took their license, it's not because they forged a document. It's because the capital that they said was there was never there. So as soon as there's the first problem, shareholders value, the shareholders' funds that are supposed to provide the shock absorber are non-existent. So they fall on depositors' funds, and we start getting a problem. So you want to fix this? Ensure that the right people get the right people with the right kind of integrity are the promoters, are the directors, are the chief executives. That's the key. The good news, though, is this. Quietly, the central bank has put out new rules covering what they call the fit and proper person, trying to combat this. So again, you see an instance where a governor who has the courage to do things, right, is trying to fix that issue. But it's very simple. We're careless about our governance. The local institutions, our local champions, they're allowed to get away with murder. Look at some of the stories that came out yesterday from the Bank of Ghana conference. Look at the ones that came out earlier from the UT Capital Bank debacle. It's shameful. It's shameful, and we allow them to get away with it. The Banking Supervision Division of the Central Bank allows them to get away with it. The auditors of these institutions allow the institutions to get away with it. So what you have is very simple. If you fix the governance issues with locally owned institutions,
things will fall into place.
Things will definitely fall into place.
Let me go to the phone, and I have Dr. Priscilla Chumesi-Bafo, who's a lecturer at the Economic Department, University of Ghana. Dr. Bafo, you're welcome again.
Thank you very much.
Great. Doc, we're looking at banking, and I've asked all my guests in the studio if indeed there is a banking culture in Ghana. I don't know if you were able to listen in the beginning, and I was looking at how, in other countries, the banks literally chase individuals and throw offers at you all the time, trying to, entice you. And then we have a banking system where we chase the banks, to nothing. And the decision was that because we are not very good paymasters. I mean, could that just be the factor, or is it that master-servant thing which has gone into the head of the banks, because the bank manager is the boss, and that culture is also there, or is it purely because we are not good paymasters?
Okay, thank you very much once again for the opportunity, and a very good evening to your viewers.
Great.
I believe that overall, banks that are chasing people abroad should, in principle, not be different from our banks in Ghana, really. Because we have multinational companies, banks over here who are also doing quite well. So the question is, why are our indigenous banks struggling? The main issue, which we keep hammering on day in and day out, is the issue of traceability of individuals in this country, right? Do we have proper address systems that are working? Can we identify you to a specific place if you go for a loan and you default in paying? So all these are issues. I mean, and these are challenges that exist that our banks face. But that notwithstanding, the question is, how are foreign banks able to thrive in the same environment? And the issue boils down to the whole corporate governance issues. We have banks that are managed by managers who move funds around. So in the first place, banks, I mean, looking at the preamble that the central bank put out there, you could clearly tell that in the case of Beige Bank and Royal Bank and the other, I mean, they satisfy the minimum capital requirement to get the banking license. But the moment the banking license is received, you see that funds are moved around and those funds do not exist. But there is a reason, there is a need for those funds to exist, to be as a safety, I mean, a working capital for the bank, really. So, I mean, these are all ethical issues that we need to look at going forward. But on the whole, I would say that, yes, I mean, although some people are saying that it is rather late, why would the central bank issue a license and in a year revoke the license and all that? Yes, maybe some supervision was not done well, and that is why some of these things were able to move under the radar. But given that the Bank of Ghana has observed that and is now able to crack the whip and, I mean, move people in line, I believe it's a step in the right direction, really. And moving forward, we would expect that a higher level of supervision would be done so that the perception that our indigenous banks are not good and all, it's all not good for the banking culture in the country as a whole, really.
Dr. Balfour, let me stay with you. I mean, one of the issues is the unbanked population is, huge, vast. Compared to the 30 million people, the very few people that are with these traditional banks. However, mobile money is thriving with billions and billions and billions. Is there anything that the central, the main conventional banks are not doing? Should they reduce, some of the requirements, or what is it that is making mobile money bank, grow and, conventional banking struggle?
Yes, that is an interesting question, and you are right. We have a large unbanked public in this country. And like you said, mobile money is thriving. Why is it thriving? First of all, there are no bureaucracies as in the use of mobile money, right? We know we have a country that is saddled with a higher level of illiteracy, right? So some people even walking to the bank to go and talk to somebody to fill a form is a huge barrier, right? But with the mobile money, I mean, you just go to a bank, a vendor, deposit your money, and your money is on your phone, and you are able to use it. So these are challenges that we need to address. How can the bank tap into this rich source of unbanked public who have resources, huge chunks of resources that they are keeping with them under their pillows elsewhere, and now a great avenue is mobile money. So you can tell that there is a significant challenge, barrier that exists, that people perceive banking to be, in quotes, elitist. So, I mean, to walk into a bank, and a vendor just walk into a bank and go and access accounts and all. I mean, are they able to speak English? All these are significant barriers that exist. And that is why when you look clearly, you can tell that the formal banking system seems to be struggling, while other semi-informal systems like the Susu collectors and the mobile money avenue seem to be booming because they are quite appealing to the common man. They are appealing to the ordinary person. And I believe that banks should find ingenious ways of reaching out to the common people so that all these, huge resources that exist, basically what is financial intermediation about? It is all about collecting surplus resources that are with people that they are not using, parceling them and giving it to deficit spending agents, people who want to invest, people who want to borrow money to do a given a transaction X or Y. So basically, the banks need to find ingenious ways of reaching out to the common man and trying to delink themselves with this perception of, elitism, where, you have to be posh, you have to be dressed in a certain way to be able to go to the banks, be fluent in the language and all. I believe that is a significant barrier that exists for the ordinary Ghanaian in terms of the reasons why they are not using the formal channel.
Okay, Doc, stay there for me. Stephen, do you agree that should the bank just focus on you and I, or should they look at tapping into this unbanked population?
I think talking about unbanked, initially, I don't know, doctor, is she a doctor?
Yes,
or something?
yes. She's
Yeah,
a
she made mention of address system and stuff like that. These are, I would say, systematic problems or systemic problems. They are there. I was concentrating on what behaviors of these banks, actions and inactions. What are they doing wrong or right for us to get to this level?
Yeah.
I think one of the major difficulties was about the bad debt. And I think the major difference between that and the mobile money we are talking about.
No, I put a question to her that why are banks struggling when there are so many millions of people who need to put their money somewhere, and therefore mobile money is growing and some banks are collapsing? Should the banks look into tapping into this? Because after all, that's all the banks need.
One thing you should also know is that the banks have their niche or segment.
Okay.
You know that our market as a country is basically the defensive type. When we say defensive type, I'm trying not to be too technical. Their systematic risk index is less than 1. You realize that Ghana's market comprises mostly SMEs, small businesses. And the banks in Ghana mostly target big businesses, one, because of their requirement and the risk that comes with these small businesses. So the definitions of what they expect, the kind of market segment, or even I would say niche, that they have created for themselves. You realize that, let me give you this practical scenario. There was a time that Barclays Bank, sorry, I shouldn't have mentioned it, but decided to open branches all over Ghana, because they realized that BOA, now was Amalgamated Bank, now is it Bank of Africa or something. And then those banks, small banks, relatively, if I put that, they were taking over the market. And even the banking industry was complaining that microfinance and other things seem to be taking over, simply because monkeys play by sizes. Probably banks are looking up. It will be difficult for my mother in the market to go to Barclays Bank and say that I want a loan. I want a loan from Barclays Bank. Sometimes even the edifice where the locations are, it will be difficult for a lot of SMEs, individual businessmen and women who are the majority on the market, to approach such banks. So that might have contributed to this problem with financial inclusion when it comes to, and even the processes. Most of our people probably initially were not educated. Now a lot of them are, even plantain sellers, some of them are educated. How are they going to write? And these banks, they have huge documents you have to fill. Even sometimes, some of them are not even ready to speak Gachi, English, Ewe and co. But these are market women and boys from maybe the garages, magazine drivers who make money, and like they don't even have what it takes to even get closer to a bank and talk to a lady there. So I think that problem, unless the banks redefine or define new products that will suit this market, I hope you understand what I'm saying. Other than that, if they want to really go their normal way, and that's why if you check microfinance financial institutions, apart from the fact that maybe they have high interest rates, they normally do well, and that's why they think they are there and they rush into banking, because they get a lot of inflows. Money, they are very liquid, money comes in, goes out, and they think, oh, we are there, let's move into banking. But when they get into banking, it's a different ball game altogether. And that is why we had different requirements for each of them before you can be licensed. I think it's one of the major difficulties. And the banks also think that, okay, before you even come in, your address, collateral, your this, you're that. And these small businesses, some of them, they even pledge. They live with somebody in one room. So if you ask for collateral, where is he going to get it from? Even they don't, most of them don't even have address, postal address. They don't have it. Probably their background, where they come from. So these are the major fundamental issues that probably creating this gap or debridging the small businesses and the banks. And the big businesses that are classified as aggressive sector, it is extremely difficult because there are not many, there are few. I quite remember I came from UK 2007, and a lot of banks were approaching me then, come for cars. They'll bring Mercedes-Benz, BMW, loans, as you were talking about. They were doing that in Ghana. In fact, I bought the Benz and I got loan from BOA then. I had saved with them only 6 months because they come and present to you. So sometimes it's also the environment, the economic state. I mean, how risk can be reduced. Because if the banks think, hey, things are getting hard, I mean, generally, and people take money and they don't pay, they are recording high rate of bad debt, then they will have to keep their money. And they realize that even if somebody travel from Afram Plains to Accra, Koforodi or Kumasi, Takoradi to pick money, as Madam said, address system, even getting information on the person, database, is a problem. So I think it is a very huge problem that the players in the industry, especially my boss and co, should come together and redefine, I keep on saying redefine, or come out with some tailor-made product or policies that can be user-friendly, that can really give more opportunities for people to get involved. Some even don't even understand. Trust me, some people are operating huge amount of monies in Ghana here, but they don't bank them. They rather prefer keeping the money in-house. Some even, they dig hole, do it nicely. Some, they get metal boxes and keep the money in. They don't even understand the essence of saving or even further investing.
Going to give my money
I
to
hope you
somebody.
understand what I'm saying. So I think the industry, they themselves, I think one of the things people should know is that if you are marketing, you should be able to sit down, strategically anticipate, understand what the customers, the clients need. Then you define your product.
I'm going to take a break, and then when
in
I
a
come
way
back,
that
I want to pick you up on that to find out that is there an equilibrium line, i.e., because everybody is saying that, defaulting. The defaulters are also going to say, the interests are too high, I couldn't make, I could not make enough money to pay. So is there a line, or is there that interest rate where if you peg it at, the guy borrowing the money would be able to do business with the money and then come and pay back so that you make profit and I pay back? Is there a line, and where is it? Because everybody says that the lending rate is too high. We're coming straight back. Well, thank you very much for staying. And this is not a 1 hour topic, but we are doing our best. On the phone is Dr. Priscilla Chumesi-Bafo. In studio is Stephen Amoa and Joe Jackson. But I'm going to go to the phone to start. Dr. Bafo. Hello, Doc.
Hello, Nana.
Good. Doc, this issue of people not servicing their debt has become one of the major complaints. Those who are not servicing their debt are saying, listen, at 27-30%, I mean, what business can I do to make profit and get that extra 30 to go and pay? And so it's become, where should the line be drawn? Central Bank has reduced policy rates about 17%, but it's not being translated. Where should the line be so that the guy borrowing money, can do business and have enough to pay back and the bank make profit? Where should that line be drawn?
Yes, that's a challenge, really. Because when you look at, the current prime rate, which is 17%, what is the lending rate on the market in recent times? 27%. What goes into this lending rate, really? First of all, we are looking at the cost of borrowing from the central bank in case the banks do that, which is the prime rate. We are looking at the transaction cost of the bank. right? So in their daily administration, in total, how much is it and what percentage are they putting on loans? And then the other bit is the cost of default, right? So because of the higher probability that people will come for loans and they will not pay back, the risk of default is very high. So that premium also contributes towards the high lending rate which is on the market. And you pose the question, what is the threshold that would ensure that people would come for loans and they back? That's, I mean, I'm yet to cite a study that has gone into that. But the bottom line is that the higher the interest rate on loans, the greater the likelihood that people will go for the loans and they'll be able to pay back. Why is that? First of all, when the interest rate is high, there is something we call adverse selection. Some people know that per their characteristics, they will go for the loan, they won't pay anyway. And when the interest rate is high, people who are quite conservative and do not want to owe anybody would be discouraged from going for loans, right? Because they are scared. They are afraid that they may not be able to pay back. So the banks most likely would attract the bad guys, and they are the ones who have the higher probability of not paying back. And the other is that when the interest rate is this high, what kind of economic activity can be very viable for somebody to go for a loan at an interest rate of 28%, engage in a given productive activity, pay the cost of capital, labor, land and all, and pay the cost of the loan and still make profit on it? So you see that the higher the interest rate, obviously the greater would be the probability that banks would attract bad guys who would consistently be the defaulters, and that contributes to the large non-performing loans in their books, really. So, I mean, I cannot tell you that a 15% interest rate is a good rate that will make everybody happy. And, I mean, there is no zero default rate anywhere, right? But in our situation, the issue the banks need to work on is to try and close the gap between their lending rate and the prime rate that is set by the central bank. And the spread, the difference between the lending rate and the prime rate, like I've explained, is the transaction cost. So banks should find ingenious ways of cutting down on their cost of operations. And when that is done, and given, I mean, the current activity of trying to, I mean, saturate our address system by trying to get everybody on board the digital address system, all these are ways that in the long run, we would expect that it will reduce the significant spread between the prime rate and the lending rate, which would also, to a large extent, reduce the default rate in the books of our commercial banks.
Dr. Balfour, thank you very much for that. Thank you so much for your insight. I've got 10 minutes to go, so I'll split it. Well, 9 minutes, I'll split it. 4 minutes with my guest inside studio. But Mr. Jackson, I mean, you are with Delex Finance. I mean, is there some sort of a percentage where, you know, when you borrow the money, you know, say, ask for this percentage, whatever happens, even if I don't make profit, I can at least pay back. But 27 there, I'm not.
I'll be honest with you, 27 is low.
Hey.
It is low. I don't know.
Now, I think it's the lowest. If it's the,
I don't know how she gets 27. But I'll tell you that when you want to borrow, especially if you're an individual or an SME, and it's not through the banking sector, rates are in excess of 48%.
Wow.
That's the total, what we call the annualized percentage rate, which is all the fees, etc. you put
the
into
APR, right?
The APR, yes, is in excess of 48%.
Wow. That's high.
That's high.
So that's guaranteed default rate, right?
No, you see, we talked about bringing the interest rates down. The interest rates are high, all for two reasons. One, for a very long time, the government itself was borrowing so much that there was very little left for the private sector. That was when the T-bill rates were high.
Yeah.
The second thing also is this.
Was that what was keeping most banks afloat then?
Yes, because you didn't have to do anything. All you had to do is to take your money, put it into T-bill, and you're fine. But the second most important thing is
And
this.
now the T-bills are very low now.
They've come down to sub 13%. Now, the second challenge is that for so long as lending to you is risky, I have to price the risk out.
The risk premium.
So long as I don't know where you stay, so long as you can run away, so long as you can change your location, so long as I may be left.
But is that not tipping the scale again?
No.
Where maybe I would have paid, but now I genuinely aren't.
But there are easy things to do. Or forgive me, but I used to live in Nigeria. In Nigeria, everybody has one bank number. Whether you bank with Barclays or Stanchart, all your accounts, you're traced by one bank number. So if you take a loan from me and you don't pay, wherever, unless you don't have any other banking relationship, I'll be able to trace it and find you. That is what will bring rates down.
The ability to find the guy who borrowed the money.
Find him and collect your money back. For so long as all the other systems don't work, nothing will work. The rates will stay consistently high because the risk of default is high. The rates will stay consistently, not just the rates will stay high. Nobody is going to chase you to come and give you money because the risk of default is high.
Hey, Stephen, but is there no? I mean, I know this addressing system is the issue, but clearly there must database. I mean,
it's not just the addressing system; it's the ID, the addressing system. All other things come together to help identify.
One of them, at least.
But you see, what I'm saying is that there must be genuine people who want to start a business, and if it wasn't for 48%, could have done the business, made some profit and bring it back. But by 48%, even if you make 38% profit, which is quite high, you haven't even made.
I think it's all about the risk my big brother is talking about. But the risk sometimes
is it not easy money that the bank is looking for? A risk. Because
I think banks in Ghana, we don't have time to talk about it, but I think also sometimes they're also profiteering.
Too much.
Yeah, because you do know something. He was talking about T-bills. I think it went as high as 22-23%.
Yeah, 23%.
Yes.
And that same time, comparable securities. That is, when you invest probably in comparable securities in a bank's product, they were giving about 15%. And that time was even defeating and actually contradicting global financial models. Because when T-bills go up, investing with any bank, it should go higher than that. Because the banks are classified rather risky assets or securities. And the T-bills are classified risk-free if things were to be all right, our economic structures and everything. So anytime I invest in Bank A, the principle is that, or the calculation is that, the T-bill rate plus addition, which is the premium for the risk that I've taken to invest in. But we got to the point where rather the risk-free was giving higher returns than the banks. And that was why the banks were rather not going through struggle. Okay, let me go T-bill straight. And it really affected our. Thank God now it's as low as 13%.
And it should come down.
I want to give this advice. When I work for some companies in Ghana, if the banks will take this thing serious, a lot of documents or the parameters that they present for their documents or applications to be appraised and be given loans or otherwise, based on that they consider the risk and other factors, are not correct. They are fake. Trust me. Look, even these 5 banks that have collapsed, I was listening to Bank of Ghana's, I think, Deputy MD, and she was saying that information that they were supposed to provide to them, it was one of the reasons they allowed KPMG or whatever as an audit firm to go and administer and check. And to me, in banking sector or in other area jurisdictions, they call it confirmatory assessment or examination, because the banks has its own. Bank of Ghana, Central Bank as a regulator, has its own. That one is deemed as primary. You collect returns and other things and you analyze. When you are not too sure, you can let a second-hand body or whatever go to do forensic audit or administration to know what exactly was going on. Most of the data, information given by applicants in Ghana are not correct.
Wow.
So you base on that, and then you give them the loans, and wahala can catch you. So apart from the address risk, apart from other risk factors, and apart from systematic risk factors, because mind you, between the company risk and the systematic risk factors, I think we also have country risk. Because the risk factors in Ghana might be different from risk factors in England or other places. But all that I'm saying is that a lot of companies managed by Ghanaians, one, they don't have good accountants, correct? Some of them don't even have at all. They don't even have finance men managing it. Meanwhile, their capital or capitalization have run 20 million Ghana, some into dollars, millions of dollars, they have it. But they run the businesses like, as he said, owner management. They can't separate ownership from control. They are not doing things right. But when they need a loan, they can go for it, or somebody even in the bank can coach them, and they'll provide everything that you need, like cosmetic document. And then you look at it and you give the loan. You go and realize that even sometimes they don't have location, even address, they don't have it. So the bank should also now go below or beyond what they do. And they should also design a program where day-to-day running of those client businesses, especially those with some amount of money or principal giving them, they should be part. There should be a way of monitoring whatever is going on,
will allow
so
us.
that otherwise the debt, bad debt or the low recovery will be so high that it doesn't matter how much interest you put on it. Because I don't think it's because solely of the interest. Interest might contribute. But the things they present, the businesses are not doing well to pay them.
I need to get this gentleman in to do this topic again, because it's a bigger conversation, so that we look at it on a wider need. And like I said, I don't want us to finger point the 5 banks that went down, but look at what it is that is happening, because I'm sure the others in the pipeline who will soon fall if things are not done right. I want to say thank you so much to Joe Jackson, Stephen Amoa, and Dr. Priscilla Chumesiba for shedding so much light into it. And to you at home, like I said, tomorrow we'll be back to do this all over again. Thank you very much for watching. Gentlemen, thank you so much.